Hey everybody, it's Maureen Lein, your local lender with Rate, here with this week's Mortgage Minute. So this week was another reminder that one report doesn't tell the whole story. So we had a lot of economic data coming out, but overall it's pointing towards an economy that's slowing at a very healthy pace. And that's generally good news for mortgage interest rates. The biggest headline, though, this week was the labor market. So the ADP employment report showed that employers added just 98,000 jobs in June, which came in below expectations. Now, that's a sign that hiring is beginning to cool, but not enough to suggest that the economy is in trouble. For the bond market, well, that's actually a pretty good balance because slower job growth typically then eases that inflation concerns. And speaking of inflation, well, we also received more encouraging news in regards to that. Manufacturing costs cooled and rental prices, well, they continue to soften. Apartment rents are now down about 1.2% from a year ago, and vacant apartments are taking much longer to lease. And since housing costs make up a large portion of inflation, that is just another piece of the puzzle pointing towards lower inflation over time. Now, meanwhile, home values continue doing what they've been doing, and that is climbing. So several home price reports released this week showed that appreciation is still happening, even with today's mortgage interest rates. Now, that is a very important reminder, everybody, that while buyers wait for rates to improve, home prices may continue moving higher, which is then making today's purchase potentially more expensive tomorrow. Now, mortgage applications, well, they didn't change much this week. Purchase activity is still running ahead of last year, and refinance applications, well, they are also remaining stronger than they were a year ago. Now, if you have been watching, though, the interest rates this week, well, you have probably noticed that they have bounced around quite a bit. And this comes from a comment that someone at the Federal Reserve made earlier in the week, which then briefly pushed rates higher. But today's weaker employment data and softer inflation signals, that helped recover much of that movement. Now, the next big event, though, is going to be Thursday's official jobs report. If it confirms that the labor market's continuing to cool gradually, well, mortgage rates could have some room to improve. But if it surprises to the upside, well, then we can expect a little more volatility before we head into the holiday weekend. So that is it for this week's Mortgage Minute. As always, if you have questions or concerns or want to know if now is a good time to refinance, you can give me a call. I'd love to chat. And you guys have a safe and a wonderful holiday weekend. And please don't forget to like and share.